Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so we were asked to do a video about rents.
Yes.
So we're going to talk about rents, mostly in Las Vegas, but we have some national numbers too. We get all this from Zumper.
Right.
The reason we got it from them is they have data that's not only all the MLS data, but then they have all the other data because people go directly on their site. If you don't know who Zumper is, they're like Zillow, but they just do rentals. They don't do sales.
So thank you very much for making the suggestion to do the video on rentals. We appreciate it. If you have other suggestions for other videos, please leave that in the comments. Obviously, we read them and we try to do videos that interest you.
We are not experts in other markets.
No.
We could talk about it and say this is what we can show a slide, but we can't really talk about why or anything. We don't have that detailed information.
Okay, so let's talk about rentals in Vegas. So about half the people in Vegas live in an owner-occupied home. That means that they're making a mortgage payment or their home is paid off. And about the other half is making someone else's mortgage payment, right? They're tenants. So which is pretty typical. So 47% are tenants and 53% are owner-occupants, which is about half and half.
Yeah, and that's pretty... Las Vegas is a market that I think is atypical for that. There are some markets where you would find a lot less and some markets where you're going to find a lot more. Higher end markets, like very expensive markets, you're going to find more tenants because it's more expensive to buy. In super cheap markets, you're going to find more homeowners but that's a pretty good, and it's not going to be substantially more. It's going to, we're talking about this 40-60 thing usually for most of the country.
Right.
We're kind of a 50-50 market. So really quick though, who are the people? Like when you say 47%, is that Wall Street? Is that who owns those?
Right. So that's a great question. Most of these rentals are owned by people like you who are watching the video. So maybe they're people who rented out their first home and have moved up to another home, or have purchased investment properties for their retirement or for extra income, whatever reason. Maybe they've inherited a property, so maybe somebody has passed away and maybe they're renting something out in Sun City or something like that. So basically, most of these owners are people like you and I. They're natural persons. There is a segment of the population, as we've talked about, of the housing stock, as we've talked before, that is owned by institutional investors. So I'm not discounting that, but the majority of homes are owned by natural persons.
Yeah. And we've talked about this before. It's those people, it's the institutional investors that have thrown an extra wrench that didn't exist traditionally in the housing market.
Right.
That have done things. Okay, so we're going to jump right into the first slide. This is for Las Vegas. This is a market summary for Las Vegas for 3-bedroom houses. It's 3-bedroom homes. Medium rent is $2,000. That jives with what you're seeing, right?
Right, absolutely. So $2,000 is a good chunk of money, and the reason we looked at 3-bedroom homes is because those are the most frequent homes to be rented. They're the most desirable homes to be rented because they're bigger than a 2-bedroom. So somebody, they've got a couple and a couple kids, then a 3-bedroom is probably what they're going to want to rent. Versus a 2-bedroom that's going to be too small, or a 4-bedroom that's going to be too big. So we picked the 3-bedroom because that's the sweet spot. Like I said, the most homes and the most popular for tenants to rent. Yeah,
and if you're buying an investment property, I mean, the 2-bedroom might be $20,000 or $30,000 cheaper, but you're going to make up for it in rent by getting the 3-bedroom. We've always sort of focused on 3 or 4-bedroom homes they just rent faster.
They rent faster. You have a larger tenant pool because it meets the needs of more people.
The interesting thing here is the year-over-year change. You can see that it's down $89. It's about 4%, but it's up 22% month over month, or $22. So it's down $89 for the year. But this bounces around. We're not too far from where we were at the beginning of the year. We had a pretty big drop from the high, from where rental prices had gone up. The CPI did reflect this when they did the Fed adjustment. They talked about the CPI. It showed the cost of housing, which is rental housing, showed it down.
Right.
But it's still, we're going to show you more charts. It'll show you more where this was, 10 years ago.
Right. So, when you're looking at the range of rental prices, it's just like it is with a house that's being sold. The nicer the rental house, the more money it'll rent for. So you might have 2 rental houses on the same street. maybe even next to each other, and they're model matched floor plans. And one is circa 1989 and one is updated. Which one do you think is going to rent more for more money? And it will be for substantially more money, not like it's a little bit, for a lot more money, because people recognize that there's value in having an updated property and they like a nice property.
The other interesting thing is I actually went into the MLS. I pulled all of the properties up and I sorted them by how long they've been on the market. So the zeros were on top, and at the bottom there was one that had been on the market like 500 days, right? So clearly they'd ignored it or forgot about it. But the median, right in the middle, the median, half above, half below, was 24 days. Mm-hmm. So a rental being on the market 24 days is probably what it normally is.
Right.
It was a lot less a year ago, right? It was a lot less a year ago.
Right.
It was, we would put a rental in and we would probably get agents call us the next day. And do we have anything that went more than a week?
So here's the thing about it. It's just like it is with houses for sale. Houses that look nice and that are priced correctly, those are the ones that rent quickly. And those that are not priced correctly or don't look nice take longer. And that's kind of what's going on. We see this in the market right now. We do know people who have rental listings. We don't currently have anything for rent, but I do know several agents that have rental listings, and that's what they're experiencing too. They're getting phone calls on the ones that are priced correctly and look nice, and the ones that are priced optimistically and are vintage are not getting a whole lot of traction.
So yeah, there's people saying, oh my gosh, it's taking 3 times as long to rent a house. Yes, it's taking, instead of taking a week, it's taking 3 weeks. It just went back sort of to normal. This gives you a better idea of long-term what rents have done. This is the 2-bedroom chart. This goes back to 2014. As you can see, you could have rented a 2-bedroom in November for $800. That same 2-bedroom now is going to be closer to $1,500 for a 2-bedroom. Remember, this is the whole city, so this includes a super nice place in Summerlin or just a 1960s, 2-bedroom house in Spring Valley or on the east side of town or something, right? That's going to be certainly probably closer to the lower end. But you can see that that these change, as this is updated weekly. But you can see how they spiked in 21, and they've basically sort of hit a plateau and just kind of been chugging along. But there's not. Like, rents are not crashing. Like, rents are not just plummeting.
No, not at all.
Actually, rents have done better than home price sales. So, like, investor buying a house today is doing better than investor who bought last spring.
Right. Because
he's getting a cheaper house, even though he's getting less rent. The house is like 8% rent, and rents a couple percent less.
Right.
Yeah.
Yeah. So, this kind of shows you the spread too, as far as we were just looking at how much 3-bedroom homes are renting for versus 2-bedroom homes. So you're kind of getting an idea of that. This is why we favor 3-bedroom homes.
$500 for the extra bedroom.
Yeah.
Okay, the next one is the 4-bedroom one. It looks a little more linear. You can see back in 2014, you probably could have rented one for $1,400. And then right now it peaked at about $2,500. It's in the $2,400 range still. This is one of the reasons, why that for people who actually bought a house in 14, 15, 16, and now they have that $1,700 mortgage payment. People were saying, why would you do that when you could rent and only pay $1,400? Well, they're still making a $1,700 mortgage payment,
right.
and the other people are paying $2,400. That's $700 a month out of their pocket.
Right.
Not counting what?
Not counting the government subsidizing your interest payment, because remember, you get to deduct your interest payment. Okay. The government subsidizing your property taxes, because you get to deduct those. Yep. Not counting appreciation, because you get to collect that.
A lot of appreciation.
And then not counting your principal reduction when you're making your mortgage payment, because that's equity for you.
We'll do a whole video on that to show how powerful that is. Because remember, it's a substantial number. It's not like $5. It's a substantial number. And then what we're going to do here is we're going to show a national chart here. Okay, so this is the national rent growth 2022 to present. This is just the last 2 years. This is 1 and 2 bedrooms across the country. Now, when you look at these lines, it's like, oh, they're going down. That means that, rents are dropping. They're not dropping. This is the growth in rent. So the 0%, it would have to go below the zero for rents to have dropped. Nationally, rents have increased. Now this number it's getting closer to zero. At the end of 2022, it was back at, it's like 6% growth. There are some markets that we were looking at the whole rent report. New York was up like 40%.
Right, because remember, everybody fled New York during the pandemic, and now people have been coming back, and they've been coming back for about a year.
We actually looked during the pandemic at one point, I think it was the end of 2020, when it was really bad, New York was locked down and everybody left. There were neighborhoods in like the Upper West Side that are pretty desirable, where there were places that were like normally $4,000, $5,000 a month to rent that you could get for $2,000, $2,500. The whole buildings had, normally a building will have like one or two vacant things in it. If you have like one of the low rises, like 40, 50 unit places, small one. And they would have like 12, 15 vacant apartments. And, some people can't leave, right?
Right.
They just can't leave for whatever reason. And so, but anyway, so that's what's going on with rent growth. It does look like it's not going to skyrocket. Oana, what's your prediction? Let's talk about this next year. Rent price growth nationally in Las Vegas. First, do that one.
So, kind of like home prices, I've said, 2023 is going to be kind of a yawner. It's going to be a lot of stability. You're going to have lots of little bumps along the way, but when you're looking back at all of 2023, you're going to see stability.
Okay. And then let's talk about 5 to 10 years from now. 5 to 10 years from now, let's say inflation gets back to 2 to 3% and everything goes back to normal. Interest rates go to, where they normally should be, not, 6%. Where do you see a 3-bedroom house in Las Vegas in 5 to 10 years? Let's just say it's 2,000 now. It was, 1,000 or 1,200 maybe 10 years ago. Where is it in 5 to 10 years?
So for me, a good rule of thumb is $100 thereabouts increases annually. So if rent is $2,000 this year, it'll be $2,100 next year, $2,200 the following year, thereabouts.
That's only a 5% increase.
Right. So it's not exorbitant. I mean, you're going to see maybe when there's tenant turnover, you're going to see maybe a bigger rent increase because maybe they've done some renovations and they've updated the place. So then you're going to see a little bit more spike. But I think overall you're going to see about 5-6% renting increases, barring extraordinary events. I mean that's pretty typical. What's normal is somewhere between 5 and 8%.
Okay. Yeah, I agree with that. I would say 25 to 3,000, somewhere in there.
Right.
5 to 10 years would not be unreasonable.
Yeah.
There could be ups and downs. Anything can happen. Obviously Las Vegas is a town that's growing. We still have relatively cheap rents compared to our brothers and sisters to the west of us, which is the whole, Seattle all the way to San Diego.
Right.
Much higher. And even in the Phoenix area, it's relatively cheap there. They have almost 3 times as many people as we have.
And of course, it depends on supply and demand. So, if the available rental units really plummets, then landlords have the possibility of increasing rents more. What I'm talking about is basically really even keel, nothing exciting happening. That's what you can expect.
Last thing, there's not excess building and speculation happening in Vegas right now.
No, there is not. There's actually not a whole lot of building going on. And we've talked about this before. Across the nation and in Vegas, not a lot of permits being pulled for building, which means that there will not be a lot of new home construction available for buyers to purchase, whether they're owner-occupants or investors. So that means that it's a very limited housing supply. And that's what I was saying, that if we get to a point where we have a lot more demand than what we have supply, then you will see rents being pushed up. And that's what you saw last year. Last year, rents, went up like 20%. There was just all this big excitement. The Gazette Journal did an article about how, rents had gone up 22%. Another article said they had gone up 28%. So all these crazy amounts. And that was because of what was happening in the market. There was a lot of demand, not enough supply. And that's what caused landlords to say, hey, I have a commodity that everybody's interested in. and I'm going to maximize the amount that I can get for it.
We still have tens of thousands of people moving here every month.
Yes.
There is substantial apartment building going on. You can see as you drive around.
But that's temporary housing is the way I see apartments. I see apartments as temporary housing because most people's ultimate goal is to be in a standalone single family home. So people coming to town, that they will maybe move into an apartment until they figure out where they want to be, and then maybe they'll either go rent a house or go buy a house. So that's why I see apartments as temporary housing, not or maybe temporary is not the right word, maybe interim housing until they find a home that they want to purchase or that they want to rent long term.
You move to Vegas, you get an apartment, you meet somebody, you end up moving into a house, then you want to have some dogs or whatever. You can't do that in an apartment probably.
Right.
And then you decide you want to, rent goes up for 4 or 5 years. You say, let's just go buy a house maybe or whatever.
Right. Yeah, so that's the story on rentals. Tell us what you think. We are interested in your opinions. Let us know where you're watching from and what's happening in your market. If you liked the video, if it was interesting, if it entertained you, made you laugh, or if you learned something, please like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.